This is FinTech Futures at Sibos, and I'm joined by Sergey Nazarov, co-founder of Chainlink. Sergey, thank you so much for taking the time out to come and speak with us. Just to get started, would you like to give us a quick introduction to yourself and the work you're doing at Chainlink?
Sure, my pleasure. Thank you for having me. So Chainlink is the market-leading standard for connectivity and interoperability across chains. It injects the largest amount of data into very large amount of different chains, powering the majority of DeFi in the public chain world. And here in the private chain bank world, we're starting to power a lot of the top banks, institutions, CSDs with our CCIP protocol. The CCIP protocol plays a very similar role to TCP/IP in the internet, where TCP/IP connected a lot of disparate different internet technologies into one network that we now know as the internet. And it's actually a very similar situation to what you see with the fragmentation, the blockchain industry. What CCIP does is it connects all the fragmented blockchain technologies into what we call a single internet of contracts. And that's the thing that's of particular interest to banks, CSDs, various other market infrastructures here at Sibos, because they, I think, now understand that they're going to need to connect all the different chains within their various ecosystems into one internet of contracts in order for them to be able to transact with each other.
So we're here at Sibos, and you've been appearing on a number of panels over the course of this week with a number of large financial institutions. Why are leading banks and institutions so excited then about on-chain finance right now and tokenization?
I think it's a large and growing market where they see both their clients and other banks wanting to gain access to various advanced assets. So I'm seeing a lot of stuff for carbon credits, some real estate, and some fund tokenization. But I think beyond that, they realize that this market is going to grow massively because it's inherently a global market. So all this blockchain technology that banks are adopting will be extremely accessible globally by all their counterparties. And so they're, I think, seeing that a lot of value will migrate into these stable coins and real-world asset tokens and all these other various systems. And so what we do with them is we make sure that when they make a real-world asset or a stable coin on one of these chains of theirs, that it's properly connected to all the other bank chains, which basically gets them liquidity and usage and market adoption.
Excellent, excellent. One of the things that's been coming up as well is the blockchain interoperability problem. Can you tell us a little bit more about that?
Sure, so there's two levels to that problem. The first one is, how do banks from their existing systems efficiently integrate with hundreds of different chains? That's a very serious problem because integrating with those hundreds of chains is very difficult. Many of them constantly change. Some of them get completely redone and reshipped and all this type of stuff. So basically the first problem is, how do you connect to all the chains from your existing bank systems? That's something we've worked on solving together with Swift, where you can use Swift messages to basically trigger blockchain transactions on hundreds of different chains using our system called CCIP. And CCIP, as it's integrated into all these chains, allows you to connect to all of them through one integration. So you go from a world of having to connect to thousands of chains eventually to a world where one integration allows you to connect to hundreds of chains and then thousands of chains through that one system that is much easier for you to use from your existing infrastructure. So the friction for you to connect goes way down with the help of Chainlink and CCIP. The second part of the interoperability problem is when a bank chain made by a bank has to connect to another bank chain because that other bank chain holds value or holds liquidity that wants to purchase something on the first chain. Or there's something on the second chain that the first bank wants to purchase. And so if you have your own chain, you're kind of just siloed in your own kind of little world without the rest of the world's liquidity and value having access to your chain. And this fundamental problem is something I think all banks, CSDs, and a whole bunch of others have now fundamentally realized. And I think what they've realized is that even if they make a successful chain, even if they make high quality real-world assets or good stable coins, if their chain is not connected to the other multitude of chains, then there's no way they can be successful. And it's not even a question of the blockchain technology they use, it's a question of how do they connect to all these counterparties in these other environments. And so that problem is solved with CCIP.
Excellent. I mean, you mentioned that collaboration with Swift there. Can you tell us a little bit more about that as well and what that might mean for, I guess, the future of interoperability going forward?
Sure. So Swift has been around for over 50 years now, and they've been securely providing the ability to sign transactions using their PKI private public key infrastructure. And that infrastructure is very important because it's deeply integrated into over 11,000 banks, which means that they have a way for 11,000 banks to sign transactions. Right now, those transactions go over Swift Rails, Swift routing systems, and Swift messages. But if you could get Swift messages to properly interact with blockchains through CCIP, then you could suddenly have 11,000 banks accessing all of the world's blockchains and accessing their own individual chains and the chains of their counterparties. So our work with Swift is really focused on using the existing standards in the existing infrastructure of the banking industry, which, as you know, the banking industry doesn't like to throw out their existing infrastructure. They like to keep using it. So how do you use that existing infrastructure to efficiently connect with the hundreds and thousands of chains in a way that each bank can do it in a matter of days or weeks, not months or years? And accelerating that is really beneficial to everybody. It's beneficial to the Swift network. It's beneficial to the banks that get onto blockchains in an accelerated way. And it's also very beneficial to the blockchain ecosystem because there's more and more value in the system.
Excellent, excellent. And what would you say makes blockchain interoperability then so critical for banks?
I think the main thing is, there's two main things. One is liquidity, so the access to the other counterparties that are going to purchase their assets. If you don't have an interoperability solution that connects your chain and its assets to all the other bank chains where people are going to purchase and use your assets, then your liquidity in your market is actually very small. So that's the main first value. The second thing is really security and the ability to securely communicate with those other chains and even trigger events on those chains without having to go there. So the second thing is, how do you securely interact with chains in more and more advanced ways, where not only can you send value, but you can make the value do something on those chains, which means that you don't even have to go to that chain. You can kind of stay in your environment and affect and invoke events and do things in other places while not having to integrate with those places.
So what exciting use cases do you see banks and other financial institutions then building with tokenization and on-chain finance?
So I see them doing a lot of work on new types of assets like carbon credits. That's an exciting one where there aren't existing standards and ways of doing these things. I see some amount of real estate tokenization and some amount of fund tokenization. But realistically, I think they are now starting to realize that all the value in their systems will eventually be on a blockchain. So these initial use cases are things where they're not in any system, and so you might as well put them on this new system if you can. So it's kind of newer things or things where there's very little fractional ownership, where that has value. I think, though, and I think they're starting to realize this, that all of the value in their systems will eventually be on a blockchain. And they're realizing that these initial asset classes are just the beginning.
Excellent, excellent. And just to finish off, then, how do you anticipate tokenization and blockchain interoperability changing the face then of financial institutions and financial services then over the next 5 years or so?
I think we're going to arrive at a world where every bank actually has multiple blockchains, probably different chains for different specific categories of assets or different markets. So every bank will have multiple chains, just like they have multiple databases. Those chains will then need to be connected to the multiple chains of other banks that represent their relevant markets and regions and various asset types. And this is going to be driven by the efficiency with which you can make a chain. So historically, it's been very hard to make a chain. It's been a complicated process to launch one and make it secure. But that process is becoming more and more easy to use, easy to implement. And so I think there'll be this huge amount of new chains coming out, multiple chains for each bank. So there'll be a lot of fragmentation. And then, and even now, the problem will be and is, how do you connect all those chains into a single network of communication and a single network of value moving across those different chains so that all the different contracts on all those different chains can transact with each other. And the fundamental problem there from the banking point of view is going to be liquidity and the access to markets and the ability to take your assets and make them available to others so they can purchase your assets or for you to purchase their assets. So this is the thing that we're solving with CCIP. It's the ability for all of these different bank chains to become connected with each other and transact with each other reliably. And that's a critical building block. And then the final thing is, I think the assets that they make on these chains that get moved around through CCIP are going to have very large amounts of data injected into them to make them good golden records or good single sources of truth that prove a lot of things about the asset in ways that manage the risk of that asset much better than the existing methods. So the existing methods, you can have some asset, and you need a lot of money to have that asset because fractional ownership doesn't really exist in many cases. So now you'll have fractional ownership. that fractional ownership will be very easy to transact for many different chains, for many different banks, and that'll be much quicker than today's systems and much more cost efficient and much better in many ways. And then the asset that you have this fractional piece of will have a lot of information attached to it. So you'll know everything about the asset, what the status of the asset is, what the value of the asset is, if there's anything significant that's changed about the asset, and you won't have to rely on your research or the bank to tell you or some credit agency to tell you. All that information will kind of be input into the asset, possibly by the credit agency and the bank and data providers. But so you'll have more assets that are easier to own, easier to move, easier to transact, and the risk will also be lower. So that, I think, will benefit globalization, the ability for everyone to transact globally about these assets. And I think it'll also greatly reduce systemic financial risk, because all that information in those assets will allow people to make well-informed, accurate decisions about assets that are less risky rather than more risky.
Exciting times. Well, Sergey, thank you so much again for taking the time out to speak with us. It's been a pleasure.
My pleasure. Thank you.
Thank you.